Let's have a look at our bonus section, how to scalp the market. So what is scalping? We're looking to take a few trades for smaller gains when nothing else is happening in the market. So maybe you're looking for a larger pattern and there's nothing else really setting up, or the ideal market situation or environment that you're looking for is just not there. So when the markets are quiet and the volatility is low, we can look to scalp the market using key dealing levels, using horizontal support and resistance lines. Identify key levels of support and resistance on the 4-hour and 1-hour chart, and then refine the levels as previously discussed in section 2. You want a tight spread when scalping, ideally 1 pip or less. The Euro-US dollar is my ideal pair, and I'm normally looking for a 1-to-1 risk reward on each trade. The risk being around 10 to 15 pips max. So what we want to do is we want to find key support and resistance zones on the 1-hour and 4-hour chart. Mark off the highs, which are the wicks, and the bodies, and draw a horizontal line through the wicks and the bodies. You can see in this case we have the wicks highlighted as well as the bodies, so we have a zone that's formed, and we're looking for multiple rejections at a level. So you can see how price is rejected. Now, as I said, this could be an hourly or a 4-hour chart, and this is no difference to marking off your previous higher time frame key areas like we went over on the daily or 4-hour charts, except now we're just looking sort of more the hourly and 4-hour charts and zones. And we watch the candle wicks and how price leaves an area. So we're also watching for serious rejection around an area. Here again, there's not major wick rejection here, but I do keep an eye on the wicks just to see that that's sort of an area where we've got some larger order flow or institutional flows coming into the market. So once we've actually marked off our key support resistance zones on the 1-hour and 4-hour chart, we can then move to the next section, which is refining the support and resistance zones. So once we've marked off our support resistance zones, we want to now refine our support resistance zones for scalping purposes. Remember, for scalping, we want to be as accurate as possible. We're using very small stops, and our entry is absolutely critical when we're looking to trade small bounces off levels. So we'll just step this forward in this example, and you can see in this example we've had a nice rally in price. You see how price stalled briefly and then continued up. I've marked this area right here. You see this red candle? I've marked this as a reference. So I'm referencing the last bearish candle before price started to rally. Okay, when price approaches this area again. So if price starts to retrace, this is the area that I want to look at placing an order to go long at. Okay, so we just step this forward. Here again, you see how price breaks away, and I'm drawing a line, horizontal line, across the body of the last bullish candle before price broke away. So here again, reference the last bullish candle before price started to drop when price approaches the highs again. So if price starts to retrace, I want to start referencing this bullish candle here. That's where the institutional flows come in. So it's at this area here and this area here. So we're fine-tuning or refining our larger zones to very, very specific levels. And it's at this area right here that I'm looking to buy. So price comes down and I want to look to enter on a limit order. So the same as with the patterns that we discussed in the previous section. We want to look for price to come down, and here we can have the limit order in the market. The stop loss will go just below this last bearish candle in this case. So a very, very tight stop loss, and we're looking for a quick reaction, a quick bounce off this area. Remember, when we're playing these levels, we're looking for little bounces. Now, these levels are hourly or 4-hour levels, and a bounce like that can be worth a quick 10 or 20 pips. Once again, once price starts to release, we want to reference the last bearish candle before price started to rally when price approaches the level again. So you see how we've referenced this bearish candle right here, drawn a horizontal level or line across that area, and what we're looking for is we're looking for price to come back and tag this candle right here. So I'm looking to buy once again with a limit order, and price comes back to this area. So that's the retest. You want to have your limit order waiting and ready, and you're looking for, once again, you're looking for a little pop off this area, a little bounce. Okay, so repay, that will be whatever the time frame is. This could be 10, 15, 20 pips. Price comes down. Now, you can look to trade this level again, but what you're very often going to find is when price comes back to an area like this for a second time, it's not as reliable. So you'll see price normally comes deeper, it runs these lows, picks up more order flow, more orders stacked below this area. You can look to trade it, but if you want to trade it, I would just reduce the risk. So if you, let's just say for argument's sake, you're trading a one standard lot, may even reduce it to half the size. Okay, I personally don't like to do that. I normally just like to take the first time back to those areas. So once price breaks, the first time it comes back to that area, that's where I'd look to trade it. So once again, releases, I'd reference the first time back to the area and look to play that bounce. And when price releases and it closes, remember we spoke about candle closes in our in one of the sections. Here again, we get a big release up. We want to reference the last bearish candle before price started to rally. Okay, when price approaches that area again. So once again, we can just mark that level off, and I'm looking to place a buy limit order if price comes back to this area, to play a little bounce off this bearish candle. This is the order block, or the institutional flows sitting here. This is where you want to look to place your scalp. Okay, so we're looking to buy on a retest. So as price comes down, this is where you want to get involved. Okay, now when playing these trades, the stop loss goes below this last bearish candle. So in this case, with this retest, the stop loss would go below here. On this retest, the stop loss, if this is a very large candle, then you may want to either pass on the trade or reduce the risk perhaps, or go to the smaller time frames to try and find another area in and around this level. Okay, so in this case, this may be too large a risk for this red candle here to put a stop below the low. Here again, you're looking for that little pop up. Okay, and you can play these from support to resistance, or you could just look for that quick bounce. Okay, so that 10, 15, 20 pip bounce. Everyone's going to do it a little bit differently. Here again, you see how price closes. We had a candle close above the range, so you just mark that off, and here again we reference this last bearish candle. Okay, nice area of potential support. We'll reference this last bearish candle, and this is where we look to place a buy limit order. Okay, so now price is starting to move up. Remember, we want to reference this last bullish candle before price broke to the downside. Okay, so I want to reference this area. Entry would go here. Stop loss above this candle here. And we're looking to sell. So price rallies, pops up, and you get a nice reaction. And here again, if you're scalping and you get good at this, you can play level to level. So you can play, for example, you could play a bounce from one area to the next. support into resistance, support into resistance. It doesn't always work, okay, nothing does. So remember, we play probabilities as we showed you in section 1, but you have a very high hit rate. If you get good at this, you can normally get around 70-80% hit rate. It does take a bit of practice, and as I said, the important thing here is a very tight spread, okay. And you can see price comes down, we reference the last bearish candle, and we get a very nice reaction, okay. So that's essentially how I look to scalp. Once we have a nice move up, I start referencing in case of an up move, start referencing the last bearish candle. That's where the institutional flows come in, and in the case of a down move, reference the last bullish candle to place that trade at. So let's have a look at a sim example of the Euro US dollar and how I like to go about scalping. This is an hourly chart that I've got up. You can see it's nicely compressed, and I'll just show you guys what I look for. So really what you want to do is you want to identify these nice moves out of ranges, and you can see, for example, here you see how we have a nice move out. I want to reference this last bearish candle right here. So if I just take this horizontal line and I drop it down, okay, see right here, if I just zoom this up, this level right here, this is what I want to reference when price is starting to move down. I'll just compress this again, and if we measure this from here to here, okay, you can see we're looking around quite a big distance, like was 30 pips, 29 pips, 28 pips, somewhere around there. So if we go to our platform, I want to place a pending order, okay, and we're going to look at placing a buy limit 121.44. Plus the spread on this platform, it's 1 pip at the moment. Okay, so 4.5. Now, in terms of stop loss, this is a bit on the wide side for a scalp, but I just want to show you as an example. You can always look to fine tune this on a smaller time frame if you want to. I'm just going to show you this to keep it really simple. So we said 29 pips in terms of stop, and I want to target 29 pips, so 1 to 1. Okay, so you can put that in there, and essentially you just wait to see if price moves down. And I'll just step this forward. Actually, let's move to a smaller time frame. As you can see, this area across here somewhere. So this area here was at a level on hourly chart. You could even fine tune it more down to sort of this area in there. So you could even look at reducing the stop loss a little bit on here for a scalp. Okay, so 21.31 with a stop loss just below this low. If you wanted to, I'll just step this forward in the 5 minute. So there's a spike down. You can have that limit order ready, and you're looking for a reaction off that area. Okay, as I said, in this case it stops a little bit on the white side, but just for illustration purposes, this is what I'm looking at. Looking for a little pop up now. Okay, so then you got taken out, and you can see we made 29 pips, so basically 1 to 1. That's how I like to play these little scalps. We just go back to the hourly chart. I'll just clear all of that, and if we just step this forward, so now that we've had a little pop up, you see how we had a little rally. I want to reference, you see this last bearish candle, price is broken above. I want to reference that level right there, 21.65. Stop loss just below here now. It's going to be a bit on the large side. So yeah, the range is a bit large. We could even look to fine tune this slightly if we wanted to, but as I said, just for illustration purposes, I'll keep it really simple. So pending order, buy limit at 21.66, stop loss at 21.32, So this is a little bit on the large side here. I'll just show you, you can play these, you know, as scalps, but just placing your orders in the market and leaving them there. If you can't be at the screen all day long, one for one. And if you get good at this, you can really do well. Now, volatility is pretty large on this at the moment, so that's why, you know, this small distance is like 35 pips. But we'll just see what happens here. So if we move over to the 5-minute chart, I just want to show you how price works around these areas. Let me step this forward. So yeah, price comes down, hits the level, and we're just looking for a little pop up here. Now, if you want to, you can start reducing risk on these trades. Okay, everyone's going to do a little bit differently, as I've said on the rest of the course. But don't move it, you know, too aggressively. Otherwise, you know, if you're trading this sort of concept on a very small time frame, price can come back and stop you out and then sort of pop up. Okay, so there's another little pop up there off that area. There's another 35 pips banked. If we go back to the hourly chart and we just step this forward, okay, you see how we had another level right here. See how price broke above, come back, we've referenced this little bearish candle. See how it closes above, comes back, retest it, there's another pop up. We then have this one here. You see this bearish candle, price comes up, you can look to play a little bounce off that. Okay, like I said, they don't all work out. We've got this area up here, the last bullish candle. You can play that bounce off there with a little stop above here. Looking for a little pop. You can see how price hits the level. Okay, so your stop on there would have been 30 pips. There's the rebounds 49 pips. Okay, and that's essentially how I would play these sort of levels from level to level. Just step this forward a little bit. Okay, so that's how I'd play the hourly chart. If we just go to the 4 hour, we can do exactly the same thing here. I've just marked this little area off. You can see prices trading in mostly a large range here. Prices popped up, okay, came down, broke up, and you see this bearish candle right here. Okay, so this is the level you want to reference. Here again, this is a large, pretty large area to watch, but just show you, you're looking to place an order right here, looking for a pop up. I'll just show you, you get this reaction, see that little reaction there. Okay, price comes down, see how you reference this candle right here. I'm stepping it forward a bit fast here, but see how price closes. Let's just go back, close above this last bearish candle. That's where you want to look to place your scalp order. Okay, see it comes right down. Let's go back there onto the, let's go to 15-minute chart quickly. So this level here we marked it off at. So there's a spike down. See the reaction off here. Okay, nice little bounce. And you can use the same concept on the smaller time frames, like a 15-minute chart or 30-minute chart. It's not as reliable as the higher time frame level, so I really prefer to trade the higher time frame levels. That's just my preference. So we just step price forward. So price is dropping now. Okay, so you've got this little range here. So your price closes below the range. So what I would look at here is a retest of this area right here. So for example, if we put a sell limit at 23.83 area, okay, we can put it a pip below. It's a 4-hour chart. Stop loss just above here. What's it, 30? No, it's just work out here quickly. So just above this bullish candle, so 20 pip, and you can shoot for 20 pips. Okay, so place that in there, and let's just go to the hourly chart, show you what that looks like. And you can see here, you could even go a step further and even fine tune this more. So instead of that 20 pip stop, you could even go, you see this little candle here, so we could even move that down from 20 to like 13. We'll just modify this. Let's go 13 pips, and we can go for 13 or 20 or even more. Okay, so like I said, everyone's going to do a little bit differently. Let's just step that forward. So there's a spike up, that's what you're looking for. Just go to the 5-minute chart here. I'm looking for a little pop lower. Okay, so there's your little pop down, and you get paid. So that's essentially what I like to do, and you can see here, same thing again. Price closes below the range there, come back, reference this last bullish candle. See the retest there, close below, retest, that's the sell right there. Okay, you'll see it happens over and over again. Okay, so there's the candle right there you want to reference for a buy, and you can see, look at that little pop up there. Okay, so I hope you found that helpful, and that's essentially how I look at scalping the market when it's quiet. And here again, it is pretty hard work, and takes a lot of focus. So it's not for everybody, and you need a good feel for price action overall, but it can be done. And I know some guys that do exceptionally well just doing this, okay, and nothing else. You can see no fibs, no indicators, just pure price action, playing level to level.